Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm looking at NVIDIA stock here for the rest of 2020. This is coming as America's starting to reopen. We're heading into the middle part of June, and NVIDIA has run up pretty significantly, obviously since the dip. So is this a good time to get into NVIDIA, and what does the future hold? Quick disclaimer, as always, my stock picks and projections are for entertainment purposes only. Please talk to a financial professional before investing in the stock market. However, if you enjoy stock market analysis, investing tips, and personal finance videos, then please subscribe to the 40 Finance channel. Thank you to everyone who's subscribed so far. Alright, so hopefully you're familiar with NVIDIA's business. They are a chip maker, but they have scaled their business quite a bit, almost to the standpoint of being a platform, graphics processing platform, as well as some applications in databases, AI, self-driving. We'll get into all those here in a second, but let's take a look at the overall core business for NVIDIA. And you see that I highlighted, you sort of have to look bottom to top on this, but gaming reflects 51% of their fiscal year 20 revenue. It has a growth rate of 11% over 3 years. Data center is 27% of fiscal year revenue, but it has a growth rate of 53%. Then you look into the visualization side, 11% of fiscal year 20 revenue. It has a growth rate of 13%. And automotive, which came in only at 6%, that has a growth rate of 13%. So when we think about the money that NVIDIA makes, right now, the lion's share, or at least half, has been in gaming, notably computer gaming. So while they have some plays in other platforms, most of what's coming through is this rise of, I would call it PC gaming, esports, etc., where NVIDIA powers a lot of the graphics processing that goes on in those things. However, the growth story going forward, because the gaming penetration is so high, is going to be either the database side, where NVIDIA uses their chips to help databases operate faster and inherently learn from inputs and outputs. And then on the automotive side, which is almost, just barely on the radar right now at $700 million, in that space, NVIDIA has some plays into self-driving that are basically not even on the market yet. So that's the next growth driver for this company. All right, taking a look at NVIDIA stock at where it stands today. Stock price when I made this was $356.80. This is a Monday morning. I built some of these slides last night. I think we were slightly down today to about $350. You got a 52-week range of 142 to 367, and you see that over here on this is a 1-year chart. So back in June of 19, you were right around the 150 mark, and now you're all the way up to the 350s. P ratio of 66.7, and we do get a very small dividend of 0.18% as of today. I expect that going forward would probably go up very slowly over time. Forward PE of 44, trailing 12-month revenue of $11.7 billion. NVIDIA has $16 billion cash on hand and basically a negligible debt load. So it's a very well-run company from an asset standpoint and a financial standpoint, and that's where I think that we could see more dividends slowly in the future, but in the short term they're probably focused on investing to diversify out of gaming at least a little bit to protect all their revenue streams. Alright, so where does the price of NVIDIA stand today in terms of value? In order to do this, I usually look at the past several quarters of the valuation metrics to try to figure out, like, is this price high compared to the revenues that they're bringing in. Take a look at the top highlighted line here of trailing PE of 65.54. It doesn't take long to go back and see that NVIDIA was offered at a PE of 19 only back in 2019. Over the past few quarters, though, it has sat in that 60 range. But 65 right now is the highest we've seen in a while. Forward PE, essentially the same story. The 44 is the highest we've seen over the past several quarters. And not much changes when you get down to price to sales and price to book. While it's, sort of small changes since January of 2020, the bottom line is the price of NVIDIA as it sits today is higher than it has been in the past. I don't think that's a surprise to anyone because these monumental growth stories have certainly been priced with a premium. So perhaps if you haven't started a position yet, you might decide to wait until the overall market dip or some sort of bad news coming out of the NVIDIA camp and see if you can save a couple bucks. All right, taking a look at the TipRanks dashboard to see what do the top performing analysts think about NVIDIA. Shout out as always to TipRanks. I am a paid subscriber, and TipRanks really helps me to gauge analyst opinions easily in one place. It also offers some insider sentiment, hedge fund activity, things like that that go far beyond what you see in your standard Yahoo Finance or CNBC reports. My affiliate link is in the description if you're interested in learning more and supporting the channel. From an NVIDIA standpoint, we got 27 of the best performing analysts with a buy rating on NVIDIA. 3 holds, 1 sell. Median price target is $379.58. That's a 6% upside from today, but you kind of get the feel that NVIDIA is inching definitely closer to the high part of their price targets. One analyst has a target of 430 and another bear at the low end has 260. All right, so what's the bottom line on NVIDIA, at least from my opinion? Well, for starters, this is a company with excellent fundamentals. Obviously, the PE ratio right now is trending a little higher than it has in the past. But if you're talking about debt management, cash on hand, a vision for the future, and still some tricks up their sleeves in other industries, this is a very good stock for the long term. The biggest upside, though, in terms of revenue is not in gaming, where they're essentially not even competing with anyone. It is in the data center, which has already shown that 3-year CAGR of 53% or so, whatever it was on the first slide. And then the self-driving or automated driving play. Again, automotive, they only generated $700 million from automotive last year. If they can dive deeper into that industry, particularly in self-driving or some sort of other processor that they can get into vehicles, there's a pretty big opportunity that could contribute nicely to the bottom line. And obviously, that's not as far-fetched as we would think because of the way that the Teslas and whatnot have changed the world very recently. If there's downsides to NVIDIA, we sort of covered them. The price right now might be a little high. Sure would be nice to get in on that like 310, 300 range on the next dip. I just think that the premium's too high right now. However, it's a great company for the long term. So if you're already in and you're doing cost averaging, I don't personally see any problem there. But at some point, it's just going to be smarter to sit on the sidelines and wait for the price to come down a little bit, likely just with a general market dip. One interesting thing as we make this video here in early June, their investor day is on June 9th. So that's going to be an interesting one to see, hey, how has the data centers, how have the self-driving dreams and growth prospects How are they going in 2020, and what is the outlook for 2021 and beyond? So that'll be a very key presentation as far as the future holds. Can NVIDIA continue to diversify their revenue streams, and when can we expect to start seeing more of that? Bottom line, like I said, NVIDIA, great stock, all the components that you want to see as far as well-managed financials, growth plans, a industry that's growing, multiple industries that are growing. So this definitely deserves a place in your portfolio. It doesn't necessarily have to be a standalone stock. There's plenty of ETFs out there that will have exposure to NVIDIA. All right, guys, hopefully you enjoyed this take on NVIDIA. Please give me a like and subscribe if you did. I'll see you on the next video.